Ever wondered how the wealthy manage to navigate the tax landscape? What if I told you that one of the top 10 wealthiest humans on Earth, the CEO of Berkshire Hathaway, Warren Buffett, pays the same amount of income taxes as his secretary? Or what if I told you that Elon Musk and Jeff Bezos have gotten away with paying $0 in federal income taxes? Are they doing something illegal? Not at all. And today you can learn how to do it yourself. In this video, you will learn about the art of tax optimization used by billionaires to legally pay less taxes than everyone else. Grab your notepads and let's uncover the millionaire's playbook for tax efficiency. Our first reason can be very amusing for some of our viewers. However, the truth is that billionaires like Elon Musk pay $0 in income tax for the simple reason that they have a salary. How can you be taxed on your income if you do not have one? The wealthiest people in the world did not reach their level by getting paid the so-called salary that is so desired by the middle class. Billionaires such as Elon Musk and Jeff Bezos have never been paid a salary for owning and managing their company. Instead, they get paid in stock options. Stock options provide employees with the opportunity to share in the success and growth of the company. If the company's stock price increases, employees can realize significant financial gains when they exercise their options. When this happens, their profit from selling their option is taxed as capital gains tax. Capital gains tax rates are way lower than income tax rates, especially if the stocks are held for longer than a year. Capital gains tax can go up to 20%, in contrast to salaries, wages, and bonuses. Subject to income tax, which can go up to 37%. Crazy, right? Want to know what is even crazier? That is just the beginning. There is a method to make it even more effective for all the savvy entrepreneurs out there, ready to take it to another level. Ever heard of the strategy buy, borrow, die? This strategy is a financial planning and wealth management approach that involves purchasing, appreciating assets, borrowing against them, and ultimately using the borrowed funds without selling the assets. Confused? Here's a quick breakdown of how the buy, borrow, die strategy works. The first step is to build a portfolio with appreciating assets such as real estate, businesses, or stocks. It works best if you can target appreciating assets that also provide a healthy cash flow. Be careful not to get in a bad deal on what you think might be an asset but ends up being a liability, dragging you down on your growth. Building a healthy portfolio is essential in having a strong foundation for the next steps coming ahead. The next step is borrowing. Once the assets have appreciated, you can borrow against the value of these assets. It gets even better. When the investor borrows from the banks, it is also eligible to get additional tax breaks from those same loans. When you pay for the interest rate charges, those are also tax deductions you can use for your benefit to legally pay less taxes. The borrowed funds can then be used for various purposes, including lifestyle expenses, investments, or other financial needs. And lastly, the die phase. This phase refers to the eventual passing away of the investor or entrepreneur. When the individual dies, the heirs inherit the assets tax-free in something called step-up in basis. This same strategy will also allow the heir to pay lower capital gains tax if the asset is sold later on. Although, why sell? You can repeat the process multiple times and keep growing the empire. A great real-life example of this strategy is Elon Musk. The original stock options Elon Musk got for Tesla were at $6 per share. He was given millions of these stock options, ready to grow and sprout one day as the company grew over time. When the stock went up to $1,000 per share, he technically received a lot of money, but none of the money was in his bank account. That means he cannot be charged capital gains tax on his profit because he has not sold those stock options yet. Instead of selling his stock options and assuming capital gains tax on that same profit, Elon Musk can go to the bank and take a loan against his stock options, valued at billions of dollars. No bank would ever say no to that. He takes the loan and pays 3, 4, or maybe 5% interest on it. Now, what if his company grows at a minimum of 6%? He is making even more profits. Elon can use his new debt for whatever he wants. The funds can be used to buy even more investments and that way 10x his business empire again and again. This is the technique of the rich people use to live financially free, stress-free, and pay no taxes on their income. The be borrow die strategy is amazingly effective. However, not everyone is a fan of this method being legal. President Joe Biden tried to get rid of these tax breaks in 2021. Unfortunately for President Biden, he did not get much support for his ideas when sharing them in Congress, and the bill Ultra-Millionaire Tax Act did not make it very far. The current tax environment in the United States is very unlikely to change anytime soon, so do not wait any longer and go start buying assets today.